Yeah, so we are group number 16, and group 16 consists of Igor,
Julia.
Robert.
And Dylan.
and in this video, we're gonna tell you what we have decided on our project and what system we decide to use for accounting for, yeah, that's right, American Guitars. Alright, company, American Guitars, is producing two types of guitars. Now, they're producing simple guitars for regular folks, and they're producing professional guitars for people like me. Now, they're using normal costing system. Let me tell you more about that exciting system. Normal costing is a method of costing that is used in a derivation of cost. The components is used for the normal costing to derive the cost are actual cost of materials, actual cost of labor, and standard overhead rate that is used for allocation purpose. Since normal costing makes use of standard overhead rates instead of actual overhead rates, this method is used in determining the product cost, where there is no sudden and increasing costs. Now, this method is normal costing, is also generally accepted and is allowed to derive costs of product using techniques under GAAP and IFRS. Now, in addition to that, under normal costing, we calculate applied overhead using an overhead absorption rate, which is then multiplied by the actual data available. In other words, applied overhead are calculated by using actual data and estimated budgeted data together. We use this combo because unavailability of complete information on basis of the time. Budgeted data simply consists of budgeted overhead and budgeted quantity or amount of absorption base on which overhead are estimated. Companies mostly use such bases regarding which actual data is easily available. Units produced, direct material costs, direct labor costs, machine hours, and labor costs, and all other stuff. Now, major advantages of normal costing is that its predetermined overhead rate is calculated before the beginning of the period. So, major advantages of normal costing is that predetermined overhead rate is calculated before the beginning of the period. By making this estimate before production begins, management is better able to make decisions. Well, of course, there's disadvantages, and disadvantage of a normal costing is actual quantities are used to allocate the cost to the products. Now, that's a problem. Now, we have to talk about MOH allocation, and Julia will cover that.
I'm going to talk about manufacturing overhead allocation. American Guitar allocated manufacturing overhead by using the predetermined rate which was calculated before the beginning of the period. The typical procedure for allocation overhead is to accumulate all manufacturing overhead costs into one or more cost drivers and then use an allocation base to proportion to overhead cost in the cost pools to inventory. We choose to use direct labor hours as a cost driver and use the previous year's actual direct labor hours as the cost of allocation base. We then identify and total all the manufacturing costs to create a total cost pool which was used to calculate the manufacturing overhead rate. American Guitar implemented a dual allocation system to allocate predetermined costs to both the construction and the finishing department. When we compare the actual manufacturing cost to the allocated manufacturing cost to determine the amount of overhead that was under or over applied. We determined that American Guitar over allocated manufacturing overhead by $30,829. And now Robert is going to talk about standard costing.
Thank you, Julia. I will be talking about the standard costing. Like, what is standard costing? The planning of expected costs often used in manufacturing for accounting and inventories and production. When actual costs differ from the standard cost, variances are reported. The standard costing involves the creation of estimated costs for some of the activities with the company. The core reason for using standard costs is that there are many numbers of applications. There is too time consuming to collect actual costing, so standard costings are used as close appropriation as actual costing. As I said, there are variances. The standard costing and the related variances is a valuable management tool. If a variance arises, management becomes aware of the manufacturing cost had deferred and from the standard cost. If the actual costs are greater than the standard cost, the variance is unfavorable. And unfavorable variance tells management if everything else says constant, company's actual profit will be less than planned. If the actual cost is less than standard costing, the variance is favorable. A favorable variance tells management that if everything else stays constant, the actual profit will likely exceed the planned profit. There are advantages of using standard costing. The budget composes of the standard costs, and it will be impossible to include the exact actual cost of an item on the day budget is finalized. Also, since the key application of the budget is to compare it to the actual results of subsequent periods, the standards used within it continue to appear in the financial reporting through the budget period. The standards that are viewed and responsible by the employees can promote economy and efficiency. They provide benchmarks that individuals can be used to judge their own performances. If cost remains with the standards, managers can focus on their issues. When costs fall significantly outside the standards, managers are alerted that there are many problems required attention. These approaches help managers to focus on important issues. The use of standard costs can present a number of potential problems. Managers are insensitive and use variable reports. Morale may suffer. Employees should receive positive reinforcement for work well done. If variances are used, employees may be tempted to cover up unfavorable variances to take actions that are not in the best interest of the company to make sure the variances are favorable. Now Dylan is going to talk about the systems we recommend.
Thank you, Robert. Now we'll talk about what system we recommend that American Guitar use in the future. The company American Guitar currently employs a normal, otherwise known as absorption costing system. However, our recommendation is that American Guitar drops the normal costing system that they are currently using and instead adopt a standard costing system. While it will take a big investment of time and capital and financial resources in order to change costing systems, we believe that the long-term benefit of switching to a standard costing system will make the transition worthwhile. The main advantage a standard costing system can provide American Guitar is that it will allow the company to determine variance rates among different departments. The ability to determine variance will provide management the ability to hone in on the performance of individual departments and determine what areas within those departments are causing the variance. Overall, the ability to determine where these problems lie will allow American Guitar to create solutions for these problems and ultimately increase overall profitability.
And so this concludes our video. Thank you very much for your attention, and like always, have a nice day.